And that's what it all comes down to. What lifestyle do you want to live? So some of the numbers I'm going to give you today, I fully understand. The U.S. is just one place, so the numbers are going to differ from country to country, but draw from it what you can. I'm going to make a very good case for why Bitcoin is extremely important to consider when it comes to retirement. When it comes to how much you need for retirement, it literally comes down to what type of lifestyle you want to live. Do you want to live in a single wide, a double wide? Do you want to live in a beach house? Do you want to ride around the country in an RV? Or do you want to travel from country to country, essentially spending the rest of your life on vacation? Well, obviously those things cost money, and that's why retirement really depends on the lifestyle you want to live. A recent article in the Motley Fool stated that you're going to need 80% of your current income during retirement to maintain the same lifestyle. So put simply, if you make $100,000 annually today, when you retire, you're going to need to make $80,000 annually to keep the same lifestyle. And if you want to do some of that on the high end as far as traveling from place to place, then we're talking about more like 90% of what you're currently making on an annual basis. Let's say that you consider yourself the typical retiree. You and your spouse make $120,000 a year, and it is getting close to time to retire. So when you retire, if we take that 80%, according to the article, you are going to need $8,000 a month. Now that's $96,000 annually. That is not a small amount of money in terms of especially those who are not prepared for it. Let that marinate for just a second. Now, if you plan to live for 20 more years after retirement, and I hope that you plan to live even longer, I want to make sure that this is clear. A lot of people think when it comes to retirement that you have this big amount of money sitting in a savings account and you just spend it until it runs out. That is not the typical way it's supposed to work. The money that you've saved up is still in the market drawing interest, and then you're going to take the interest annually, and that's what you're going to live off of, and the base amount stays in there so that you can continue living off of that for the remainder of your life. And let me go ahead and take the time to tell you right now that I am not a financial advisor. So, you know the drill. Do your own research and seek the help of a professional before you invest in anything. Now, were you to just keep it in a savings account, that would likely make you a savage anyway, because if your money is sitting in savings, with inflation, you're losing money. So that is not a good idea, in my opinion. Here's a perfect scenario that the article goes on to give. Continue our example of a couple that needs $8,000 in monthly income to retire. Let's say each spouse is expecting $1,500 per month from Social Security, and that one spouse also has $1,000 in a monthly pension. This means that of the $8,000 in the monthly income needs, $4,000 is being taken care of by sources other than savings. In this particular case, what we're looking for is an additional $4,000 per month, and that is because Social Security and the pension from the spouses combined is taking care of $4,000. So those amounts combined are supposed to make up that $8,000, which is the $96,000 a year that I previously referenced. One rule of thumb that is used a lot is the 4% rule, and that's that the amount of interest you're going to live off of is 4%. So because this particular couple needs $48,000 a year and they want to live off the 4% rule, that means in their account, they're going to have $1.2 million. 4% of that is $48,000 per year. And of course, they already had the $48,000 already with the pension and the Social Security. So that makes up that total amount. Now, as far as I'm concerned, I'm not for 1 second going to believe that Social Security will even be around. So because of that, I'm not going to lean and depend on that. And as far as the pension, most pensions are gone. So I'm not depending on pension either. So what's that mean? That means to meet this same scenario, now we're looking at the full $96,000 annual that we need. And that means we're looking at having to have $2.4 million in the account so that when we draw off the 4% rule, we now have our $8,000 a month so that we can travel, have a good time, and live a good life after retirement. We should be able to continue living that life for the remainder of our lives because we're just drawing the 4% off of the base, not actually spending the base. Now I want you to think about how you're going to come up with $2.4 million, provided that's the life you want and you want to travel, which most people wouldn't mind that, we'll say. So how are you going to come up with $2.4 million, especially if you're starting late? Let's take a look real quick at what Kathy Wood thinks Bitcoin will reach in the next 5 years.
We believe that the price will be tenfold of where it is today. So instead of 45,000, over 500,000. Confidence in Ether has gone up dramatically as we've seen the beginning of this transition from proof of work to proof of stake. We'd still probably do 60% Bitcoin, 40% Ether.
That's a $500,000 Bitcoin in the next 5 years. And by the way, if you don't know who Kathy Wood is, prior to seeing this video, do your research. She has pretty much been on top of great calls for years when it comes to investing. She's well respected, so you should check it out. But I just wanted to show you that to give you the context. We're talking about a $500,000 Bitcoin in the next 5 years. Say it takes 10, so what? It's a major figure we're talking about in terms of the amount that it's going to grow in such a short time. Hard to get those investments anywhere else in that short amount of time. Now, when it comes to Bitcoin, of course, nothing is certain, but I want you to take a second and think about the internet and the growth of the internet. Much like the growth of the internet, we've already seen what blockchain technology has started to do. We're still really in the beginning. You can expect similar growth in cryptocurrencies over time, similar to the internet. This is basically the new internet. So really, you should think about that. Now, that's where I draw some of my certainty from. Of course, I spent a lot of time in the blockchain space. So as you learn, you do become more comfortable with it, but just really think about the internet and think about all the breaking news that you continually hear about Bitcoin adoption. Come on, we're even to the point now where we've got places adopting it as their currency, as their national currency. It's a pretty big deal, and it's going to continue to happen. So what we can do is, when it comes to retirement, just use this as a gauge for what it takes as far as savings to get to that point of having enough money to retire based on the figures we've been using throughout this video. If you start at age 25, making $50,000 a year with a 10% contribution into a 401k, and mind you, we're going to use a figure that the market is returning 8% on your investment annually, and you're getting a 2% raise as well each and every year, that is going to put you at over $2.2 million. So even with that figure and investing for 40 years and an 8% return, you're talking about still being short of that $2.4 million. And that's investing for 40 years. While $2.2 million is not that shabby, you have to remember a loaf of bread by that time will be $71.
What? Bro, what are you talking about, man?
Okay, maybe not $71, but it's certainly going to be more expensive than it currently is, as it's more expensive now than it was 20 and 30 years ago, and especially 40. Nothing's wrong with $2.2 million. Even if you never touch cryptocurrency and you put 10% away each year and end up with $2.2 million, that is amazing. So even in that case, if you never got into crypto, still fantastic. But I did want to point that out because I also saw, and I think this was from 2019, where less than 21% actually put 10% or more into their 401k. So obviously at that point, the likelihood of people putting in 10% is not that great. So obviously a lot of people aren't going to do that. And the reason I wanted to emphasize that is because they still didn't meet that $2.4 million goal. So I want to point that out. Also, something to point out is with that 2% raise annually over 40 years, you started out at $50,000 a year, and by the time you retire at 65 years old, you're now making $110,000 a year. And that is with 2% increases annually. Sometimes you'll certainly make more. A lot of times it's 3%. But I wanted to use more of a reserved number when I included that in there. And the figures I used on getting to that 2.2 million also had that 2% increase annually as well. So now that I've taken you down the path of really what it takes just from a general working perspective, and that's starting out making $50,000 a year, ending your career making $110,000, wanting to have that lifestyle where you can travel some, to Bitcoin by that time. Literally to Bitcoin, because I do believe Bitcoin is going to reach $1 million one day. It's just strictly a numbers thing. Many people won't believe it. That's fine. But certainly if it can reach 500,000 in the next 5 to 10 years, do you think it will not double in the next 40, maybe even less, 30, 20? So that's just something to think about. So just think about the fact that all you have to do to get to that number of 2.2 million, let alone 2.4 million, and the fact that 2 Bitcoin or 2.5 Bitcoin could be enough to surpass that, certainly in 40 years. Bitcoin and retirement, it's simple math. Now, not everybody has the amount of money that Bitcoin currently is at, just a drop on it, and that's fine. DCA, dollar cost average. And also, got to remember, this one's about Bitcoin. You've got options like Ethereum, ADA. There's tons of other ones. But if you're going to go that route, it's extremely important that you do your own research and really learn about what you're getting into. Because if not, the market's volatile, and you could end up in this cycle where you sell the highs and buy back in low, and that is the last thing you want. And I suspect over time we will see Bitcoin reach a point where it is in people's regular 401k or it is in their IRA. Now, some of these things are possible already, but I'm talking about in terms of a mainstream way of doing it. So tell me in the comments, what is a better bet? And I know this depends on where you're at in your life right now. Is there a better chance of you ending, regardless of where you're at, ending your career and retiring with $2.4 million in your account, or you accumulating 2 Bitcoin? Tell me in the comments. And also, a lot of people will trade to get those 2 Bitcoin. Now, if you want to trade, you need to learn how so that you do it the right way. It's extremely important that you learn how. Don't throw your money into the market like you're gambling. You will lose. I hope you've enjoyed this. I hope it was insightful. Thanks for watching the content. If you want to keep up with the latest content that I drop, hit the bell for notification. And thank you for watching Perry Unlikely. By the way, the likes are absolutely free, so drill the like button, and I will see you next time.